If you are like most new business owners, you probably had a moment where you thought, am I doing any of this right? In today's episode, we're diving into real questions from people across the country. We have questions from Denver all the way to Massachusetts, all about navigating taxes, LLCs, deductions, and what really matters when you're just getting started. So whether you're a nurse practitioner paid through a 1099, or you're running a home daycare, or thinking about trusts and estates, this episode is for you. And trust me, there are some things in here you've probably never considered, but should. All right, so let's dive into it. And again, these are questions that we either submit directly on our website or through our Facebook group. If you're not a member of our Facebook group, go there, join now, just type in small business tax secrets and answer a few questions and join there. The first question is from Denver, Colorado, and they said, hey, I'm starting out as a 1099 contractor with an LLC, and I need help for my tiny business. First off, you're in the right place. If you're listening to our podcast, you're watching our YouTube videos, you're diving into anything that we're doing here, you're in the right place because you have an opportunity to where you can get things correct from the beginning. The biggest couple tips for someone that's just getting started that I always say is just keep clear separation and start that process of tax planning early. You already have an LLC set up, so that's going to give you some protection. Attorney can talk to you about that, but it also allows you to potentially move to an S corporation. Once your tiny business starts to hit about $50,000, $60,000 or more in profit, you might want to look at an S corporation. That LLC is a great starting point from that, but that could be way further than where you actually need to be right now. And so where you might want to be focusing your attention on now is just, hey, do I have books set up for this? At this tiny business, whether I'm running it out of an Excel or have a Xero account or QuickBooks Online account, but do I have a bookkeeping file that I'm recording all the business income and all the associated expenses with this? And the other thing I want to talk about is keeping things separate. Have a business bank account that you are keeping all of your business transactions in and keep that separate than your personal bank account. We want to make sure that we have that separation and build that solid foundation, because as your business grows, any kind of habits or things that you create when you're younger or when your business is younger tend to go with you. So we want to try to make sure we get on top of some of those opportunities. And so keeping things separate. The other thing I would say is continue to dive into the things that we're talking about here. All of this stuff is relevant, and especially reach out and look at the episode where we talk about maximizing deductions or after tax versus pre-tax spending, because this is a mindset shift that you as a new business owner need to understand, because it will impact and lead to so many of the strategies that we talk about here. So first off, congratulations, and I look forward to kind of hearing more about your journey. And when the time is right, definitely check out TaxZone. We can be that hand in, we can be that resource for you where you have a tax professional walking you through at your service at any time that you need them. All right, our next question is from Memphis, Tennessee, and they said, hi, I am a 1099 independent contractor for a company through Signify Health. I am a nurse practitioner. They use a platform called Work Market to pay me, and they provided me with a 1099 NEC earnings and also a breakdown of my earnings. And then they said, what is the Schedule C? And so if you are a 1099 contractor, no S corporation, maybe even no LLC set up, you are a 1099 contractor, that essentially means that you are a business owner. When you get 1099 NEC, you are a business owner. So you're going to have wages or earnings. That's going to be what shows up on that 1099. And then you're going to file that on a Schedule C. A Schedule C is just a document that goes on your personal tax return. And on that Schedule C, you're going to indicate if there's any expenses associated with that work that you're doing. So maybe a home office, you might have cell phone and internet related to it. There might be things that you do associated with that. There might be travel related to this. All sorts of expenses that you maybe have with this business affairs, all that's going to be recorded onto your Schedule C. So Schedule C is just where you file, if you don't have no entity set up, or even if you're just have an LLC set up, but you're just a single member LLC, no S corp election or anything, you file the activity from that 1099 business on your Schedule C, which is just an addendum to your personal tax return. Basically, it shows the profit and loss of your business, saying, hey, 1099, here's my income, here's all the associated expenses with it, here's the profit, and that rolls through to you. Now, one thing to consider is that if you're getting a 1099, generally speaking, that means that your employer is not taking any taxes out of your payments. So you're going to be responsible for paying the taxes on that income down the road. And if it's set up as a Schedule C, you might get hit with self-employment taxes, or you're likely going to get hit with self-employment taxes on top of your normal income tax rate. And so as your business starts to grow, maybe you're hitting $50,000, $60,000 or more in profit, we might want to be looking at an S corporation. But in order to have that S corporation, we need to have an LLC set up. So just some background things to be thinking of. But to answer your question, what is Schedule C? That's where you're going to file that information on your personal tax return. We have a question from Somerset, Kentucky, and they said, where can I get the book? I assume you're referring to my Small Business Tax Savings Handbook. I keep one of these on my desk all the time, super handy and really kind of just a really good reference book. As some of these questions come up, you can go into the specific chapter and look at that. This book can be found on Amazon, many different websites out there, but if you go to taxsavingsbook.com, that'll take you to a webpage or it'll take you directly to the Amazon site. Otherwise, just go to Amazon and type in Small Business Tax Savings Handbook and you'll be able to purchase it there. We have a question from George, and he said, do I need an LLC as a 1099 employee to take advantage of things like the home office, mileage, etc.? Would I need my 1099 to pay a separate bank account, or can it go directly into my own checking or savings account? So, George, the first question is, do you need an LLC as a 1099 employee? First, you're not a 1099 employee, you're a 1099 contractor. So you're a contractor for somebody and you're getting a 1099 related to that. And so the question is, do you need an LLC to take advantage of things like the home office mileage deduction? Absolutely not. So you are considered, if you're receiving 1099 income with no LLC, you're just considered a sole proprietorship. And you're going to file that activity from that sole proprietorship on your personal tax return on your Schedule C. Previous question that we just kind of went through is very similar to that. And finally, that Schedule C is where you're going to be able to take all these different deductions on it, which is going to be the home office, mileage, meals, travel, all these different things are going to be taken on that Schedule C. So you do not need an LLC to be able to take those deductions. If you were to take that same business of yours that you're currently running as a sole proprietorship, no LLC, and let's say you started an LLC, from a tax perspective, just from opening an LLC, nothing changes. Everything stays exactly the same as far as what deductions are available to you or not. What opening that LLC does, if you move down that route, is it opens the ability for you to elect S Corp status on that LLC down the road if you hit certain income limitations and that makes sense for you. Again, we'd want to see if that does make sense or not. So that's the other piece that LLCs come in, and obviously an attorney can talk to you about this, is but some legal protections. There's some legal reasons why an LLC might be beneficial for you. But end of the statement is, yes, you can still take advantage of all those deductions, valid deductions. As long as they're valid deductions, of course, you can take advantage of them, whether you have an LLC or not, if you're just operating as a sole prop. Now, you asked, should it go directly into your joint checking savings account, your personal account? I would open up a separate bank account for this business activity. Again, just cleanliness. If the IRS were to audit you, having complete separation really helps back up some of those expenses that you might be taking. So I would recommend separating it out, but could you technically, from a sole proprietorship, if you're operating a sole proprietorship, could you technically have that into your regular checking account? You could, but I would open up something to keep it separate. We have a question from somebody in Minnesota, and they said, hello, my name is Briss, and I'm reaching out because I need help preparing our taxes. I run an in-home childcare business. My husband's employed with a W-2. I want to make sure everything's filed correctly. Could you let me know what documents? Okay, so yeah, at TaxZone, we don't do tax prep and filing. We are strictly tax strategists. We help our members pay the least amount of taxes legally possible, and we specifically focus on the strategy. We do not do preparing and filing tax returns. But with that being said, if you are looking for a tax preparer, we have multiple firms within our network that we can refer you to that can handle the tax prep and filing for you. So if you're a member of TaxZone, go to our partner directory and we can introduce you to one of our accounting firm partners where they'll handle the tax prep and filing, and then we'll be that tax strategy piece. Otherwise, if you're looking for a tax strategy, how do we lower that tax bill, pay the least amount? Obviously, check out TaxZone for that. That's TaxELM.com. We have a question from Redwood City, California. And they said, I would love to get your take on ROBS versus a traditional SBA. And I'm assuming they're talking ROBS structure for a new business or an SBA loan. Boy, this is a good question. I've seen a lot of ROBS setups throughout the years, and there's pluses and minuses to both of these options, right? ROBS, basically for those that are listening, when you have ROBS, you're essentially, your retirement account is funding the startup of this new business of yours. Think of it like, okay, I'm going to start a new business. I can either use my retirement account funds to do it, or I can go get a loan to do it. I think that's really kind of what this question is here. Now, the problem with a ROBS, and that's where you're using a retirement account, is there's a lot of restrictions, and there's a lot of things you need to dot your I's and cross your T's on, and they can be expensive. You're forced to operate as a C corporation, takes the S corp out of it. Where the SBA, a little less restrictions as far as, operating. You can be an LLC, you can be an S corp, you can choose what you want there. So, I've seen a lot of people in ROB structures that just regret it. I see a lot of people that have good success with it too. It's just, you got to know what you what you're getting yourself into if you're getting robbed. So understand the negatives to it, the costs, the restrictions on your entity type. Understand what that means and what that's going to mean for you 10 years down the road. Think about that now so you just at least are prepared for that. We have a question from Greg, one of our Facebook group members, and they said, do I need to put my kids on payroll or can I pay them as contractors? Greg, great question. If your kids are under the age of 18, we do not want to pay them as a contractor. We do not want to pay them as a 1099 contractor because they're going to have to pay self-employment taxes on that income. I see this question come up and topic come up all the time. It breaks my heart when I see people do this because we're paying unnecessary taxes. If your child is under the age of 18, pay them out of a sole proprietorship or a single member LLC, and you do not have to withhold FICA taxes, Medicare, Social Security taxes on that. If they're under the standard deduction, your kids pay no income taxes on that. If we pay that cake, same kid, instead of on payroll as a W-2 out of our sole proprietorship, single member LLC, if we were to pay them as 1099, now they got to pay self-employment taxes on that income. So now over 18, maybe flip the switch a little bit. If your child's over the age of 18, we might look at saying, yes, let's pay them as a contractor if we can, right? We got to make sure that the person is what they are. So if they look, act, do everything like an employee, we got to pay them as W-2 no matter what their age is. But if we can pay them once they get to that 18, maybe in college, if we can find a way to pay them as a contractor, that could be beneficial because now they can find expenses to offset that. And so we might pay them $15,000 as a contractor, but they have $8,000 in expenses to help offset that. And now they're only paying taxes on 7 instead of 15. Whatever, we can look into different things there, but definitely under the age of 18, definitely do not pay them as a contractor. You want to pay them as a W-2, as an employee of your business. Now, real quick, if you are a business owner and you are tired of guessing when it comes to taxes, we just released a brand new tax savings starter kit, and it's 100% free. Inside, you'll get our ultimate list of business deductions. You'll get real case studies showing how others have saved $5,000 to $25,000 and more, and you'll get access to a bonus discovery call with our team. Just head on over to taxsavingspodcast.com/starter kit to grab your free copy. Again, that's taxsavingspodcast.com/starter kit. All right, back to the questions. So we have a question here from Fullerton, California. Hello, I'd like to get details on strategies for saving in taxes. You're in the right place. Our Small Business Tax Savings Podcast, Small Business Tax TV, Small Business Tax Savings Handbook, all of this is about all that. And then we have even more. We have a software where you have access to professionals, the blueprint that helps walk you through exactly how to implement all these different strategies, that tells you which strategies are relevant to you versus which ones aren't. A full team to support you, that's TaxHelm. So many different resources. Just find out which one makes sense for you and where you're at right now, whether that's a podcast, whether that's YouTube, whether that's a book, whether you want hands-on support with TaxHelm, whatever it is, find those solutions. But all those you can find at taxsavingspodcast.com or TaxElm, TaxElm.com. All right, we have a question from Curtis, and it says, for Mike in the podcast Q&A episode, I love the podcast and I've learned a lot. I've contemplated joining TaxElm, but I'm not sure if being a sole member LLC that does not generate tons of income, if it'd be worth it to join. Depends. We see a lot of people just getting started that love TaxHelm, or if you're making anywhere $50,000-$60,000 or more in profit in your business, definitely makes sense. But anyways, he says, my question is about the home office deduction. What implications or consequences should you consider with regard to selling your house and having a home office? Should you stop using the deduction 2 or 3 years before the sale? What is the depreciation recapture? It is also confusing and no one talks about. How should one plan for this? Yeah, great question, Curtis. And when we look at the home office deduction, it depends on which one you're taking. If you're taking the actual method where you're calculating all those expenses, taking the actual method, which includes all the expenses, or if you're just using the simplified method where we're just doing $5 per square foot. If you're using the simplified method, no worries at all about depreciation recapture. Now, if you're using the actual method, part of that calculation is going to be a depreciation expense. Now, most of the time, home office deductions are a pretty small amount of a house, and then even that home office deduction that you're getting, the depreciation piece is relatively smaller as well. So this usually doesn't make a huge impact, but yes, technically when you would sell that house any depreciation you took in that home office calculation would need to be considered as depreciation recapture and taken as income when you sell that house. So, look at your prior year tax return. And on that, if you're using the actual method, and if you're an S corporation or a single member LLC, it depends on all sorts of different things, but there should be a line item for depreciation, and find out what you took for depreciation on that house, and that would be the piece that would be subject to recapture. Again, if you're using the actual method. Now, again, this number usually doesn't make a huge impact, plus or minus, so would never be a reason I'd say don't take the home office deduction because of that. Absolutely not. It's still beneficial. We have a question from Deborah, and she said, I'm getting ready to leave a full-time, high-paying job and move into small business ownership. I need coaching and strategy on how to do that. Deborah, check out TaxHome. This is going to be the best solution for you, where you have somebody, complete access to our team to help you along this way and help you along that journey. But also check out everything that we're doing here. We put a lot of content out, a lot of good information, so check out those things as well. Question from Barstow, California. What is your estimated charge to prepare tax returns for a small construction LLC company? The owner is the only employee. Again, we don't do tax prep, but we have partners that do. It depends on a lot of things. I would say personal tax returns average around, say, $750 for a personal tax return. A business tax return, you're looking at $2,000, $1,500, $2,000 for a business tax return. Personal tax return starting at $500, $750 and goes up from there. So those are kind of rough numbers on kind of what to expect as you're looking around. We have a question from a listener from Little Rock, Arkansas. I would like to book an appointment. Go to taxhome.com and click demo, and you can book a call directly with our team there. We have a question from someone from Los Angeles, California, and they said, help, we need to utilize advanced tax strategies. Yes, absolutely. So advanced tax strategies, typically when we talk about tax strategies, we break it into two pieces. We have core tax strategies, and then we have advanced tax strategies. Core tax strategies available to business owners of all sizes, anywhere, anytime, super easy to implement, easy to understand. Advanced tax strategies, a little bit hard to implement, a little bit more complex. Typically, we're going to be reserved for people making $300,000, $400,000 or more, generally stating. And so advanced strategies, we talk about a lot of those right within TaxHome and have a lot of opportunities there. So if you remember at TaxHome, check out our modules on the advanced strategies, and then reach out, obviously, to our team, and we can get you introduced to whoever you need to there. We have a question from West Roxbury, Massachusetts, and this is related to a trust and how to operate after one is deceased and parents have separate trusts. Does the trust need to file a separate tax return? The biggest thing I would say here is that talk to the person that set up this trust. Trust can be complex. Every trust is different. There's multiple kinds of trusts within, even if you're like a revocable trust or a irrevocable trust, within each one of those, there's multiple variations of it. So I don't want to give general advice on it. Talk to the firm that set this thing up, or at least talk to an estate planning attorney or a trust attorney to go through your specific situation to ask these. A lot of details there. I just don't want to make a generalization when there's a lot of variations of it. We have a message from someone from Texas. They said, thank you for your podcast content. Yes, thanks for listening. Question from Sky from our Facebook group. And he said, question in regards to the home office for S corporations in combination with the Augusta Rule. In the September 24th and 10th episodes, the home office and the Augusta Rules were discussed. However, for the S Corp, if using the reimbursed actual percentage for home office, using an accountable plan to pay for square footage percentage of mortgage, utilities, everything else, does this negate the Augusta Rule as the office is used 365 days, or can both be combined? So, and there's a couple more questions here, but let me answer that question first. Does having a home office mean that you can't do the Augusta Rule, or vice versa? Absolutely not. So a home office is going to be a specific room in your house. The Augusta Rule is going to be when you have a specific event, whether it's a board meeting, whether it's a retreat, something like that, a specific event at your house that is separate from your home office. So if you're having that board meeting in your home office, then you're not going to be able to take both of it. But if your home office is in the basement, but then you're having that board meeting in the dining room, which is upstairs or in a completely different area, then you can take both of them, because you're renting out the dining room. You're not renting out the home office that's in the basement. So keep that in mind, that yes, you can do both of these as long as it's not for the same space, if that makes sense. So if you're running a retreat out of your home office, that's going to be included in the home office. But if you're running a retreat out of the rest of your house, not just the home office, but the rest of your entire house, that's where the Augusta Rule comes in. So just think about that. Also, another question, the home office as a percentage. If I recall, some of the previous episodes has recapture rules upon sale of home for pass-through entities. Do the same recapture rules apply for S corporations? Yes, technically, whenever you take depreciation on something and then you're selling it, that's where the recapture opens up. Now, with an S corporation, it's a little bit harder because you're kind of doing this in the back of a document in the accountable plan. It's not on paper as much, but yeah, you'd still kind of want to calculate that because technically those same rules would apply for the recapture. Final question here. We have a question from Marta in our Facebook group, and she said, I have a very small consulting side gig that historically has been bringing in $5,000 to $9,000 each year. Currently under my own name, part of my annual individual tax return. Since I was asked to complete a new W-9, it got me thinking again. Should I bother with an LLC or corporation for this small of the operations? I would say probably not. From a tax standpoint, whether you open an LLC, I definitely wouldn't do a corp for this, but whether you open up an LLC or not, from a tax perspective, it's going to be exactly the same. So when an LLC can be beneficial, if you need some legal protections, talk to an attorney about that. Or if the income, the profit from it starts to get above that $50,000, $60,000, then we would want it under an LLC, so it opens up the door for that S corporation if it makes sense. But if the legal side's okay, from a tax perspective, if it's an LLC or not an LLC, again, tax exactly the same way until we might want to look at an S corporation. So, at $5,000, $10,000 a year, as long as the legal side's okay, probably fine. But from a tax perspective. All right. So you have just heard real questions from real people who are trying to get their financial life in order, just like you. Whether it's taking that first step as a 1099 contractor, figuring out home office deductions, or wondering how trusts work after a parent passes, every story is different, but they all share one thing: the need is there for strategy. If you found this helpful, don't forget to hit subscribe, hit that like button, and share it with a business owner who's sick of paying too much in tax. And if you want help from our team of tax professionals implementing all sorts of different strategies, visit us at TaxElm, that's TaxElm.com, or click the link in the description for a free discovery call. We are helping business owners like you legally lower your tax bill every single day. See you on the next one.